Welcome to our monthly engagement for the U.S. Non-Farm Payrolls. Today is Friday, the 7th of June, and we are expecting May's NFP data. Exactly a year ago, June 7th, U.S. President Donald Trump said on Thursday, June 7, after White House talks with Japanese Prime Minister Shinzo Abe, that the two leaders were working together to improve trading relations, and that see much of an improvement, apart, of course, the delay in auto tariffs. But as you can say, a year earlier, we have not seen much of an improvement, apart the delay, of course, in the auto tariffs. And that is looking more of a strategic move, to be honest, rather than anything else. Before we go, of course, ahead, I would recommend that you pay attention to this webinar. As once a wise man said, it's better to be safe than be sorry. And what I'm going to share here with you today is definitely going to give you a better perspective on how to stay safer, at least before, during, as well as after the NFP. Now, just a little to know about myself so that you know who I am. My name is Stavros Tousios. I'm the head of investments and research in the offices in Limassol for Orbex. I have traded Forex since 2013 with a nearly 2-year period of that in a professional capacity. I have been successful because I was lucky enough to have met important high-rank people who used to work in big London banks. I can't mention the names, of course, for obvious reasons. Now these traders share with me a lot of critical information and also trading strategy when I was doing my first baby steps in trading. And that's why I was able to work as a senior trader with them, alongside them, of course, when I used to live in the UK. Now, some of that info is going to be shared here today, but as you understand, the majority of it is a little bit harder to share. So I would pay attention, if I was you, to what we're going to say here today, okay, because this is a special event that we do on a monthly basis for you. So I want to do this risk disclaimer before we go ahead. Foreign exchange trading investment in derivatives can be highly speculative and may result in loss as well as profits. Foreign exchange and derivatives trading is not suitable for many members of the public, and non-risk capital should be applied. This webinar is provided for awareness purposes only, and no information contained herein constitutes a solicitation for the purpose of the purchase or sale of any commodity, security, or investment, nor should it serve as the basis for an investment decision. Orbex Limited does not guarantee the accuracy of completeness or any information or analysis supplied. Now, as always, our agenda for today, we will have the NFP preview, we will see the analyst expectations, economic indicators that help you with projections and why those can help with your projections. Of course, then I will give you my 2 cents following some short analysis, how we can choose the best pair to trade, how we can protect your capital, and then, of course, we will go to the charts. So, starting with the last NFP, we've had 170K, okay? These are the expectations for this May's release. The previous one was at 263. Now, analysts expect a decline, okay? So expect indeed the employment change to slow down a little bit, and that is expected. Now, April's data, that was a May 3rd release over here, okay? Surpassed expectation by a massive 96,000 jobs, okay? So 167 versus 263, sorry. So there is a cyclical slowdown in the auto sector, and that is the case actually. And this is hinting a modest slowing in employment change, okay? So we are expecting a slowdown to 170K. If this is going to achieve, is not sure. This is the expectation. We might see the numbers coming a little bit lower than this. We might see the numbers coming a little bit higher than this. We will see later in the analysis what we can expect from our own sort of projections. Now, May's release was better than April's, 263K over 196K, but know that May's NFP was revised down, okay? So we had a downward revision here from 196 to 189, okay, from here to here. Now, as we see, we've reached also we've had 2 consecutive rises in the NFP employment after reaching a very low value of around 20K, if I'm not mistaken. So let me delete this and go on the next page. So, analyst expectations, okay? Let's just have a look at something that everybody seems to be ignoring. Unemployment rates, average hourly earnings, and then, of course, talk a little bit about the inflation as well. Now, the analysts expect the employment rate to decline at 3.8. At 3.6, to be honest, that was too low and would be adding risks to the economy as well. So if they are right and that goes to 3.8, that would be in the long term, of course, good for the economy, but for the numbers for the short term. Now, in February, the analysts missed expectations of the 3.8, and unemployment improved to 3.6. So they were indeed expecting 3.8 as well in the previous release, so they missed that expectation. Now, in terms of wages, the expectations are upbeat, and since they cross above the 3%, okay, that has been hit into future inflation. Okay, now year on year we're up at 3.4, and this is over here, and this is a 2009 high. Okay, is this going to push inflation a little bit higher? Our wages follow the inflation. We're going to see, obviously, from different data coming through, but of course, what we expect on the month-on-month basis. Now, the expectations on the month-on-month basis are 0.4. Okay, let me just delete this so you can see that. Yeah, so from 0.2 to 0.4, and that's where we expect the forecast at 3.4. Now, the hourly earnings, of course, are critical for this report, but as a bad figure will add further pressure on Fed. Okay, and may even validate renewed fears of a rate cut. We all heard about FOMC numbers and also the Fed chair himself over the past few speeches that the Fed is ready to cut if it's necessary. Okay, so that's why we've seen the good impulse wave on the S&P and equities in general over the past week or so. Now, FOMC members, although reiterated their debated path of cost normalization, they now become more dovish. Okay, and now expect even a rate cut this year. If I'm not mistaken, it was Mr. Brainard that reiterated that might be he's actually a bit more bearish now. Now, the latest data on the CPI, okay, showed that year-on-year inflation rose from 1.9 to 2%. And considering that also the average hourly earnings have been improving year-on-year basis as well, this is expected. The question is, are we going to stay around this 2%? This is the target of the Fed, okay? Because this is going to change the game for the interest rates, how they're going to change policy in the future. Don't forget that the FOMC is 2 weeks from now, around 2 weeks. So it's the second Wednesday from today. But rebound, actually, there was a rebound in energy prices, okay? But of course, missed expectations of 2.1. Despite we missed expectations, we're still at a very good level though, okay? The question is, since we increase rates, why is inflation going higher? Okay, and this is something else posing a threat to the U.S. economy. Now, which indicators can help us? We're talking about indicators, economic indicators, and why? Okay, so when you look at the NFP, don't just look at the headline number and assume, okay, the next one was up. The previous one was up, then the one before was up, so we're going to see another one going up. That would be a 3 NFP average, let's say, and we're probably looking at either exceeding or missing expectations. It's not how it works. When we're looking at the NFP, we need to look at all the components that they make up the employment, okay? And it's not just the average earnings that we're talking about and the employment area. We're talking about other economic data coming from the US. Now, we have lagging ones as well as leading ones. The lagging ones are the ISM manufacturing and also the non-manufacturing. And that is because business conditions in manufacturing services sectors signal an increase or a decrease in employment activity. Okay? There is also the employment component from both those two reports coming out. ISM manufacturing, ISM non-manufacturing. We'll talk about it in the next slide, if I'm not mistaken. Challenger jobs cut and also the jobless claims. So it shows information on layoffs and how many people claim for unemployment benefits. Okay, and its frequency is weekly, and also it's monthly, right? The jobless claims are coming weekly, so it's a lagging indicator indeed, but it's a bit more leading than the rest because its frequency is more often. Now, the other things we can look at is the ADP non-farm employment report. It provides monthly employment data in the private sector released by the ADP. Okay, but don't forget, but samples only 60,000 eligible households. versus the 643,000 work sites in the NFP. So we're talking about a 10/1 ratio, okay? So the ADP estimate can be 10 times wrong, okay? 10 times wrong. So I know we had a very bad ADP a couple of days ago at 27,000, while expectations were 170,000 or so. You have, of course, to include it in your projections, but don't forget that there is a huge divergence between the two, okay? And I wouldn't be holding my breath on what's happening with the ADP. Now, consumer confidence, the University of Michigan and also the CBCCI survey used to measure behavioral mood and consumer optimism, hence affects spending and saving. That gives a signs for the overall business cycle. Now, down on the leading ones, we have the treasury yields and equities. Now, when the yields are up, market sentiment is bullish, and that hints the market participants project that it's going to be a good NFP. Equities are assumed to be positively correlated. Okay, now crude oil prices. When oil prices are up, market expectations are somewhat positive as well, as the boost in inflation raises the prospects for higher wages. Okay, so we need to look at all those indicators individually. And this is what I've done for you. I've put all of them on a table, okay? And what we're going to do is categorize them under pros and cons, okay? So pros and cons, we have, sorry, I missed the slide. Let's go back here. Yes, we're on the correct one. So pros and cons. ISM non-manufacturing, manufacturing came out positive, 56.9 versus previous and forecast. It beat both. The employment component, which equates to around 80% of the activity in the US, right? It came out at 58.10. Much better than the forecast, way much better than the previous. So that piece of data makes me hawkish, okay, on the NFP. But let's have a look what's happening downwards. Now, the ISM manufacturing came out at 52.10, and that is expected, to be honest, because we have manufacturing being affected by the trade wars, okay? Despite that, the employment component came out better than expected and better than the previous, a very good sign as well. So we'll put a tick here as well. So we'll have two very good indications here for the employment. Challenger job cuts, that was positive. We had a 46% increase compared to the previous one. The previous was like 10.90. Now, the thing is that, you know, when we are going to cut, this pretty much means that who are going to lose their jobs, right? How many people? This is 46% increase to the previous one. So this is a very bad one. So we'll put an X here. Jobless claims came out worse than expected, okay, and worse than previous. We'll put an X here as well. ADP, of course, was a nightmare. It was a very bad one. The forecast was 190. The previous was 270. So you see this 10x relationship here, right? 10/1 relationship, that's the previous. Of course, it's not compared to the NFP. Then the consumer estimate from the University of Michigan came out worse than expected as well, worse than previous and forecast. CB consumer was indeed very good, and that's another very good indication of a positive NFP. Previews as well as the forecast weren't as good. Now, the treasury yields are down for the day, but the equities and crude oil is up. So we have 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6. We have 6 pros versus 6 cons, right? So my projection for this NFP, of course, cannot be any more mixed than what we see today, okay? Because all of the indicators I'm using to identify whether the NFP is going to be good or not is they're actually mixed, okay? They all show different signs. I am of the opinion that there will be, of course, an employment change that they will be positive, okay? Probably even around 150K or so. That's why I think the expectations are 170. I believe that we're going to see a slowdown, of course, but not as much as people expect. I mean, we're not going to go down to 20K. Obviously, we can never be sure, okay? So this is just my opinion, and that's based on these metrics I'm using, okay? So we could see something completely different. We can have a some price, and Pretty much, not just for me, for all the markets. Now, how we can choose the best pair to trade, okay? We have to look at the interest rate differentials a little bit. What does that mean? That simply means the interest rates the banks have set. We've all known that at the moment we have the United States being the most high interest rate bank pretty much. So the interest rate differential between the United States and Switzerland would be the biggest, right? It would be 3.25. That would be the differential. Now, what we've also noticed that we've had a change in Australia and New Zealand. Both cut rates for 25 basis points over the past 2 weeks or so. Although New Zealand saw a decrease, the Australian dollar has actually kept its cool. You know, it's actually managed to even reverse and move higher. And that is because the employment is actually doing very well. The question is the Fed going to cut rates now, next? We don't know, but if this NFP comes out like way worse than expected, then in 2 weeks' time we'll have the FOMC. The possibility of the rate cut will be obviously increasing massively. Okay, so if you asked me, I would certainly choose the United States, Switzerland, UCHF, if the NFP comes out positive. Okay, for any longs, dollar, Swiss franc would be the most appropriate. Obviously, for shorts, you can go to the Canadian dollar, for example. Okay, so Canada is 175. The only one that actually has the least differential between the United States. Okay, so that would be for if the NFP came out worse than expected. Now, down on another way of choosing the best pair to trade, this is the strength meter, okay? So we'll pretty much look at what's happening in the markets as we speak for the day. We see that the euro is quite strong, the pound is quite strong. Actually, the pound is stronger compared to all the other pairs. The dollar is pretty much in similar situation as the euro. So if we want to consider any pairs dominated or being dominated by the dollar, of course, if we were to buy, we can still do the dollar Swiss franc. We can still do the Aussie dollar. We can still do the Aussie Japanese yen as well. Now, in the contrary scenario, we said about Canadian dollar and dollar over here. So we can also do the pound. That would be most preferably because the Canadian one, as you can see, is not as strong as the pound. So in case we have a bad NFP, then we can trade along on GBP USD. Okay. Now, how to protect my risk capital? Avoid, of course, one of the ways, of course, would be to avoid the NFP once and for all because volatility is very high. Second, of course, tip is to apply protective stops and take profit risk management measures. Close out all positions if you have any ahead of the results of the release in an attempt to divert from high volatility and rate risks. The other way is to hedge your positions, if any, of course, ahead of the release. Another tip is to, if you are eager, of course, to trade despite the warnings, do let the markets come down first before entering a trade. That way you will circumvent the heated environment and also have a clear picture as to where the markets could be heading towards as the market's noise is reduced after the NFP. Another tip is to analyze the data post-release. Okay, so without supporting employment, of course, wage and employment data, any directional trade is at risk of a reversal despite the NFP is over, as post-effectual bias depends on all three of those. Okay, so don't pay attention on your NFP headlines. Look at wage, look at unemployment data, look at the employment as well, and pretty much all the metrics that can give you some idea as to where the NFP could be taken next, could be taking the dollar. And pay attention to the divergence between the actual and the consensus figures, of course. Gaps of 20 to 30K are not considered much effective, in my opinion. Okay, so if there is a miss of 20 or 30K, we're not going to see a huge move, like maybe 30 pips or so. If there is anything above or beyond that, we're going to see over 50 pips move. So that way you can also know how you can set your stop losses and take profits. Okay, so what I want to do now is I want to go on the charts, okay? And I'm going to go on euro dollar first. I would want to go into some sort of wave patterns, but as you well know, they don't really matter much when we have an effect, a release like this. So I've drawn some levels over here. Okay, for the euro dollar, that would be the 12.95. Okay, even the 13. That could either be used as an entry point or as an exit point. It's really up to you. Then, of course, the highest high, 13.094. And if we want to look a little bit beyond that, we can go even a little bit higher to, one second, excuse me, we go a little bit higher to 13.25, okay? So entry could be the 12.90 or so, and exit could be the 13.25, 20, 30 pips higher. Now on the downside, of course, if the NFP comes out, well, good. We can withdraw this level now because we are like 25 pips away from this anyway. So that could be an entry point. That could be an exit point anywhere around here, the 12.34, the 12.20 or so. So anything for a 20, 30 pip range on the downside. Of course, if you want to be a bit more, if you want to take a bit more risk on your side, you can go down to 112. Okay, that's for euro dollar. Let's go to euro then to dollar again quickly. The dollar then has moved actually exactly as we were expecting it. Now in the short term, although it's expected to go a little bit higher, that will depend on the NFP, of course. Okay, so here we have drawn some levels. Let me just delete this quickly. What I can do over here, I can redraw that level. I can redraw that resistance over here. That could be used for an entry point, the 108.61 or so. On the downside, we are too far from entering here, like 40 pips. So I would, we could use this as an entry level. Okay, it's high activity over here, so we can go over here, depending on how this will move, of course, over the next 5 minutes as well. But that could be a good entry point and an exit point down to 108. Also psychological one. Pound, I'm not sure we want to, actually, yes, we do want, because it's quite strong at the moment, isn't it? So an entry point right on the top, 127.25, an exit point 20 pips higher. Of course, you can go, if you want, a little bit higher than that, 127.80 or so. Or you can just have a numerical target. It's really up to you how you want to go about that. The other thing we can do is draw a Fibonacci from the top and mark the 50 or 38 retracement, which is exactly that. So if you want to be a bit more risky, you can go up to the 50, which in my opinion is a bit too high. Maybe we can use this as a take profit level, 128, okay? So one entry, or this one entry a bit more risk averse, and then first take profit, second take profit. On the downside, it's better if we just draw our entry around here, 126.90 or so. First exit, second exit, a little bit lower. Now on the gold had an amazing rally, right? And it seems like it's going in a triangle. But anyway, it doesn't really matter. At this stage, we are really more interested on these support and resistance levels. This can be an entry point, 1240 or so, and this could be an entry point on the downside at 1230 or so, okay? Then take profit, 43, maybe too tight, or we can go a little bit higher to the previous high, 1246, okay? But I wouldn't want to risk anything above that level, so you can do take profit 1 and take profit 2 in case the NFP comes out worst. The contrary, of course, the opposite scenario, this entry is quite good, 1229, 1230. This exit, 1220, is actually quite good as well. So we're talking about $10 here per oz, per ounces for your basket. Now, dollar Swiss franc, as we talked about, we are looking prices to move in a little bit lower now. So although this might be a little bit high for an entry point now, I want to redraw that. So the 199.500 could be a good entry point. 1 the one, actually a very good psychological level as well, could be the exit point in case we see prices moving higher. On the downside, I want to redraw my entry point to here, 0.99 as well, and the take profit around 20, or even if you're a bit more risk, if you take a bit more risk, you can go down to 65 or so, 98.65. Okay, and let's have a quick look on the oil as well. Although I don't think it's going to move too much. Actually, let's just leave the oil. Let's just go on the S&P. The S&P, that's a very good level over here actually. High activity level. This could be a good entry, and that could be a very good exit. On the downside, we are looking at good activity around here, but we are of course far from the entry. So our entry could be down here at 28.48. Our exit could be 28.31, or even lower if you're a bit more risk. If you want to take a bit more risk, down to 28.24. Okay, and on the index itself, the index looks a bit far from any good points, entry points. That could be the entry, 1997.12 to the upside, and our exit can move up here to 97.32 for a few pips. On the downside, of course, we're looking at entering maybe around 96.88 or even a bit higher, but you want to avoid the noise over here, right? So make sure you have protective measures there in case there is a big swing, and normally we see this effect taking place. And of course, on the exit side, we're looking at the 96.80 or the 96.75. Now, what I want to do now, as usual, of course, let's create this nice view here. Go down on the 1 hour chart. Actually, you can even go lower on the 30 minutes. This is our DAX. I'm sorry, the index. Pay attention to the levels I'm drawing. Okay, let's change this to 30 minutes as well. And let's use the euro dollar here. Okay. Okay, that looks okay, but maybe we need to draw this as an entry point a little bit lower, because prices moved a little bit lower now as we speak. Over here, I want to go down again on the 30 minutes. Let's just get the pound here in case we have a bad one. Pound looks okay. I mean, these levels look very good to me. Maybe another entry could be up here. The 127 or so. And then, of course, let's just have a look at which one shall we look at. Let's look at the dollar Swiss franc. Okay, that one as well looks good. The levels were drawn for entries and as well as exits. Let me just delete this to have a better view. And there is 2 minutes left. Okay. So we'll have probably just less than 2 minutes left for the NFP. Let's see what is going to happen. Let me just open over here the economic calendar as well. I will just be watching that over a different screen. Okay. Because of course it is important to know what the results are. What the results are, pretty much, yeah, simple as that. So normally, what is very important, or maybe a bit surprising to look at, is that the fact that volatility has been a bit increased, and that is before the NFP. Normally we see the squeeze effect on Bollinger Bands, right? There you go. What is moving here? Euro dollar is going up. That looks like it's before it's happened as well, right? So pound DAX is going down. So entry point here on the euro. First exit. It would be a good idea. The index entry here, exit right here. That would be a very good trade. Okay. The pound dollar, our entry was a little bit too far from where prices were. Yeah, it could have been down to 120. Actually, we did say about 127, didn't we? Yes. It's just that I didn't draw it down here, 127 or so. So we're looking at this now to head a little bit higher at 130, 113. I would, if there is any trade open, I would recommend that you may maybe partially take profit or just, just call it a day on the euro dollar. So entry at 112.85, exit at 113. Now, in terms of the results themselves, right? The results, let's have a look. So Wednesday, Thursday, Friday. There seemed to be a lot of activity before the clock hit the 30th minute, right? And that means that it was widely expected that it's going to slow down, okay? And it did slow down. Let's have a look. So we are on Friday. There we go. Unemployment rate remained at 3.6. Very good for the US economy. Non-farm payrolls came down on 75K. Okay. Way beyond what I expected, to be honest, and way beyond probably what the estimates were at 170K, right? That's way beyond, like 100K miss. So as you remember, what we said earlier, it was that if there is any miss above 50K, we're going to see big moves, okay? That's why we see euro dollar has already covered from 1270 up to 12200. We already had the 50 pips that we talked about, okay? So we don't know how this is going to end up, by the end of the hour or by the end of the day. But if you got in here and you got out here, well done to you. Okay. Now the participation rate fell, and the fears, the fear everybody was expecting, the average hourly earnings remained stagnant to 0.2 month on month, and actually that drove the yearly figures down to 3.1 year on year, and this is not a good sign for the US. Okay. The only thing that is actually good is that unemployment rate remains at 3.6, which is a multi-year low as well. But the question now that is rising is who is going to fill all those jobs? Okay, this is a very low figure, and it poses threat to Fed's decision for the next FOMC now. Okay, of course, for the short term, this is considered to be as a good sign for the US economy, and that is the reason we see any sort of pressure on the downside now is just because of this number. But generally speaking, that is a bad NFP. As expected, the slowdown also, of course, was expected as well. And that is the reason we see the dollar index as well, surging all the way down here. So if you entered, if you had a pending order at 97 and closed down at 96.75, well done to you again. Then the one that seems, that's because we left it on the 2 hour, and I'm like, doesn't look like it's moving much. Okay, that makes sense now. So dollar Swiss franc. Okay, that our entry was a little bit, off away, but also was the best entry, to be honest. So at 0.99, and just for a 20 pip take profit one or whatever you want to do with it, but because of this sort of distance to the entry, I wouldn't be looking at allowing this moving any lower, to be honest. Prices came at a good level, 98.78. We could see a retracement up to that level and then a continuation to the downside. But of course, that we will know that after the hour ends, after 2 or 3 hours, we'll see how the markets react post NFP. And as we talked about the pound dollar being the currency of choice in terms of the NFP, if a bad NFP came out, let's see how that matched to that move. So we've got from 127 to 127.43, right? And if you are in right now and you're watching this, I would be cautious as to whether I want to let my trade go higher than that. Okay, this seems to be like a rejection at this moment, at least. So if you want to play it safe rather than sorry, as we said at the beginning, you may want to take partial profits here, or just close your trades in general. So you see this is indeed, as the markets market participants show, a bad NFP. We're probably looking at reaching the last target on euro dollar, 1.1325, and 1.09862 or so maybe on the dollar Swiss franc. What was the next one up for the dollar, for the pound dollar? Let's have a look. Okay, the next one up, it's quite higher up. Maybe we can just draw one take profit over here, 127.58 or so. That wouldn't be too far from where we are now, but maybe for a Friday, that would be hard for prices to get there. Obviously, as you see, the US index is taking a big dip. It broke all previous support and most likely is going to move lower, at least in the short to medium term. In the short term, we're most likely looking for a correction because at the end of the day, all of these institutions will look at taking profit at some point. Okay, so we can expect the retracement in the next few hours, maybe a whip show effect and then a continuation lower, or maybe that would just start taking effect from next week. Okay, let's have a look at let's have a look at gold. What's happening with gold? Okay, so our entry was at 1339 or so. Okay, exit at 1344 for those who are a bit more risky. I recall, maybe even going out to 1347 or so, but let that run with a small risk. Okay, so I would take most of the profits at this first level and then let the other run. And of course, moving your stop to a higher level, make sure you at least are on a break even. What else can we look? We can look at the S&P. The S&P is falling. Okay. The S&P wouldn't be a good trade. Okay. Are we on the 30 minutes? Yes, we're on the 30 minutes. So that wouldn't be a good trade at all, to be honest. But at the end of the day, we can't really trade everything, right? So always on the NFP, pick one pair, and if you're going to trade, of course, and in order to keep your risk minimum, unless if you want to break down, unless if you hedge as well, but make sure you sort of diversify your risk and your position, the size of, you redistribute the size of your trades equally. What else can we look at now? This is the S&P. Okay, so let's have a look at the dollar CAD. Ooh, dollar CAD is really looking like it's going crazy down, as well as the entry point here triggered at 133.37. First take profit, 133,200. That's 15 pips in the pocket straight away. I'm not sure if we draw any other level. We didn't. Okay, so wow, actually we did say about the 133, yeah? Yes, we did, because it's the psychological level. So pretty good for NFP, right? I mean, the NFPs like these, they're pretty easy to you know, have a very reasonable entry level and very reasonable exit level, at least for a partial take profit. But don't forget, as I said before, right? Partial take profits and move stop loss to break even to avoid this trade going against you all the way. Widely expected, if you asked a market participant, but from the economic indicator side of things, the report looked quite mixed. Now, some people will say that was mixed because the unemployment rate stayed unchanged, you know, far from expectations, but both average earnings as well as the NFP came out much worse than expected, and that's why we see this tumble. What else can we look? What's happening with Kiwi? Q as well is going up. I am assuming that could be a continuation. That would be too close for a trade. That would be a good entry level. Okay, and of course a good exit level, take profit 1 or 2. Take profit 1 would be, could be here, a few pips higher, like 15 pips or so. But it's moving a little bit slower, right? And don't forget why. It's because it's not as strong. We checked the strength meter before, right? Let me just go down to, there you go. Ah, it is quite strong. Okay, same strength as the dollar. All right. But I want to go a little bit down to the dollar CAD, because we also had, of course, the employment report coming out, right? If not mistaken. So, or was it last week? No, it was this week. So, employment change in Canada, much better than expected. Unemployment rate fell to 5.4. Wow, that's a big number. Very good report for the Canada. And that's what you get when that happens, right? The dollar card is falling crazy. So as you can see, the entries, exits would have been all closed out, the exits at least. In case you believed, of course, that these NFP would be good, that would be a complete different story, but it would always be a good idea to, you know, trade even after the NFP comes in. That's why we're talking about being able to wait, the opportunity for you to wait there for the markets to settle and then go into trading post-NFP, right? And how normally post-NFP is traded is that the markets will extend to some strong level, as we're seeing actually happening right now, and then in most cases we're going to see a retracement back to the 50 Fibonacci retracement, or even 38.2 or so within the next few hours. So this is called the dead cat bounce. That would be called actually the dead cat bounce on the dollar Swiss franc case, or the dollar cards case, or the index itself. If we look at positively influenced pairs against the dollar, that would be called a hummingbird, which is the exact opposite effect. So if we look, for example, at the dollar Swiss franc, okay, 1 second, let me just go back to one screen. If we look at this pair down in the 1 hour, okay, we would be looking we want to draw the Fibonacci retracement from the moment the prices started moving down, right? So we want to draw from here down to here. Okay, this is the lowest point. And what we want to see is whether prices are going to move higher. And if this move is like what? From 97 to 96.60, talking about 40 points, right? On the index. Then we'll be looking at prices to move like pretty much 20 points higher, right? So higher 20 points. That means that we'll be getting from 96.62 exactly to 96.82, which is another level that we have identified. And from here, of course, markets then would move lower. But that might not be the case. We might just have a very brief retracement here, very brief correction. Markets will go into a consolidation and then break lower. But most likely the case is that in the short to medium term, this is going to move lower, okay? So we can expect prices to consolidate here. Whatever happens here, it doesn't matter. And then we have another break to the downside for the medium term, okay? This is a big move, and that was a very big, very bad NFP for the US. Guys, at the same time, we'll have about 10 minutes left, so if you have any questions, please feel free to go ahead and ask, okay? I would actually even hear if any of you was able to take advantage of the opportunities over here. Were you able to take advantage of anything that we have recommended here today? It would be very, very curious to know. So the DAX is falling. Let's go back on gold here. So we see the dollar card is the one that is really going down now, okay? 133 is our level. Don't forget that, don't forget about the spreads, right? And the slippage effect. So if you are, just a recommendation or a suggestion, if you may, if you have decided to trade the NFP, it might be a good idea, it could be a good idea that you place a pending order, okay? With whatever you are willing to risk, whatever you can afford you risk, 1% of your account or whatever, pick your direction and go for it. So today it was pretty much, you know, very well known that the dollar is going to fall, right? So if you had opened the trade, you would have avoided a few of the technical risks, I would say, that come along with the risk of trading the NFP. That includes slippage, spread, of course, and the effects of these block trades coming in the market rapidly. Now, of course, the other thing is that to, you know, instead of pending order is to wait for the results to come out. But then again, one can tell you that you will be very, very, very late to come into the markets after that's happened, because all the smart money, bank money, block trades, whatever you want to call them, they will be in already. So if you are, if we assume a 20 pip move already and you're lagging 20 pips, and then you enter a trade, and then we add another 20 pips, 30 pips on top, 10 pips, whatever on top because of the spread, and if you add a little bit of slippage, you actually start your trade with like 30, 40 pips down. So you are already starting in a disadvantage here, right? That's why I reiterate that it is quite risky to trade the NFP at the time the results come out, okay? You pretty much are starting with a disadvantage. Whereas in any other case, the effects are smaller. For example, pre-NFP, pending orders, and then of course again, oh, look at the dollar card. Is this dollar card? No, 1 second. Look at the gold, how it's falling, right? It's crazy. See that? This is what we talked about. This is a whipsaw effect. And they're really pushing down now. They really want this level. Actually, this is, as you have probably realized, this is a level where bears have placed a lot of orders. So, and of course, new money comes in right now. So trading activity is huge as we speak, right? That did trigger a lot of bearish orders. Anyway, back to where we were. The most risk-averse solution would be just to wait for the NFP to finish. Let the markets come down and see if you can trade their retracement, of course, fast, because still the retracements, because the moves are huge, you still can expect to get 20 pips at least, right? I mean, you might think, oh my God, 20 pips, I can get 50, but you know, don't forget, you start in disadvantage, you start as like 30 pips down, you know, take 20 pips, don't be greedy, 20 pips is very good. If you actually manage to get 20 pips a day, you know, can you imagine how much that would be? Don't be greedy, don't wait for NFP to start making some good profits, okay? Still, the retracement, okay? Let me just go again on the dollar Swiss franc. Look, from where big money came in, down to the lowest low. We're here. This is our area, okay? So, I'm not actually suggesting that that happened now, but all I'm saying is, let me actually grab this. Opening a trade here, and the effects of the slippage and spreads are actually lower now compared to this entry, right? So you're a bit better, technically speaking, from a technical perspective. Open a trade up to here, or up to here, anywhere here, you know, you could be looking for sales. So that's from 198.60 or something, right? What was it? Actually, let's just go a little bit closer because that seems to be a few more pips than I originally thought. Okay, we're here. So 98 to 62. Okay. So going in, boom. After markets settle, right? That's what will happen. Most likely will come up here. Not on the hourly chart, but on the hourly chart, what we're most likely going to see and what would tell us that there might be a retracement shortly after the NFP is how this candle, the next candle is going to close, right? So if we have another candle that comes like that, goes a little bit lower, and then another one that's a bit, the range is changing, and then we'll have that one, smaller one, then we're most likely looking at a move back here, and then continuation lower, of course, okay? So one thing to look at is the end of the hour, okay? And then the next move, what happens? We might see a sudden move, right? That would invalidate the whole trade, the whole post-NFP trade. Because if we see a move up here, that means that we might as well just see prices then breaking lower again below that level after the 1 hour. Because that means that taking cash, put it in the pocket, and then just selling again to reposition whatever money is left here, plus new trades, okay? So the post-trade is only validated if we see the range of the candle getting smaller, if we receive a dodgy candle, and then some sort of engulfing to the upside that comes above that level. That engulfing could give us a good sign that prices are going to move around that level and then start looking for bears to come in. So there's, I can still, I see there is a few people left here. Guys, are there any questions you have? Because we will have to call it a day, call it a week, call it this month's NFP. So if there is any questions, please go ahead. Don't hesitate. If you were able to take advantage and use this webinar into your benefit, please as well let me know as well. I would be very, very interested to know whether this is actually helping you. Yeah. I will wait for another minute, and if there is anything else, if there is nothing else to add or to say, I will be calling this the end. Pay attention, of course, that we are going to release this recording on our YouTube channel shortly after the event, or most likely on Monday. I don't see any questions coming through. So I want to thank you all for being with myself for another NFP. Thank you for participating again. In case you have any questions that might come to mind later, you can contact me on Twitter, on LinkedIn, but most preferably, of course, since this recording is going to go live on our YouTube channel, you can comment, you can ask any questions, and I will be the one who will be getting back to you as soon as I can. Emily is asking, hope to change the day to Thursday instead. Emily, it is a live event, so we are going live on the NFP, while at the same time we can see how the markets react, right? So making it a Thursday, I don't think would work well, because we would be on markets that are pretty much not really represent the NFP. But in case you would like to have more information on expectations, we do have the NFP preview on our website. Okay, so I'm just going to go quickly on the blog and show you. Okay, so as you can see, we have some posts here. And one of those is the NFP preview, both in English and Spanish. So I would recommend that you go ahead and read these, because it comes out before the NFP, just to get an idea of what expectations are, what the markets are saying about the NFP, what about policy setting, and the rest of the economic indicators. Okay, and I hope this helps. Of course, Emily, you're welcome. You're welcome. I guess there's no more questions. So as I said again, I want to thank you for being with us today. If there's any other questions, feel free to post them on our YouTube channel. And as I said before, I just recommended, feel free to visit our blog. Actually, I would recommend to visit our blog. We cover a lot of topics, fundamentals and technicals, to help you improve your trading skills, okay, responsibly, in a responsible way, of course. I want to wish all of you to have a nice weekend, and if you watch our Market Insights video, I'll see you again on Monday.